Hey everybody, this is Fat Infantry Trading. Just figured I'd bring you an audio version of the Phat-plan, just in case you're riding down the road, or we can give a little further explanation as we go through it. It's a Phat-plan for the week of June the 9th. This is from last week, how the markets did, and as you can see, the major indexes did pretty well. On the weekly, they were all positive, and what we really like to see is that the small caps are starting to participate potentially. This would be a very good sign. Most of you that know that follow the market, IWM keeps fading every time it tries to break loose. This would really add some strength to the overall market bullish trend that we're in right now and be supportive action. We could see that this week with SPY up against the $600 resistance as well. So that could be something we see as if IWM continues to push forward. Oil with a pretty nice week this week, 6.5% move. Key market drivers. Basically, the stocks rallied on jobs data that came in better than expected and AI optimism. So U.S. equities posted their second consecutive week of gains with all major indexes closing higher and the S&P 500 finishing above 6,000 for the first time since February. The rally was fueled by a better than expected May jobs report. Non-farm payrolls rose, and though prior months were revised lower, the unemployment rate held steady at 4.2%. So that was all good. In the small cap stocks outperformed as previously noted. Tech and AI related stocks led sector gains boosted by strong earnings and news like with Meta. I mean, that was a big one this week, and Meta really pushed forward a little bit. Defensive sectors, and in that area, XLC has been consolidating, so that's good to see. Defensive sectors like consumer staples and utilities lagged, which is kind of what we want to see. We want to see the growth stocks going forward. Trade and geopolitical, I mean, we all know about China, and you know about Tesla with Trump and Elon going at it. Interest rates and the Fed outlook, so strong labor market data diminished expectations for an imminent Federal Reserve rate cut. Futures markets now anticipate 2 quarter-point cuts by the year end, with the first likely in September. There is some discussion from the Fed and from pretty good people that I've mentored under. We'll see how that plays out. That could be up in the air a little bit. Treasury yields rose modestly, reflecting the market's recalibration of the rate cut expectations. Commodities and other assets, we already discussed about oil. Bitcoin and other cryptocurrencies, they did pull back, but really, if you look at the miners over the week, they had another good week. I mean, like Mara, I think went, I want to say 12% over the week at one point. Gold traded within its range. I mean, it's just, we'll see. You got to be a little patient there. It doesn't go to the sky forever. And then economic data highlights, we do have PMI. We do have inflation and volatility. The VIX dropped to 16. I mean, it really is moving down. And then PMI rose to 52, while the ISM manufacturing PMI slipped to 48. So a little mix there. And then inflation, the Fed's preferred inflation measure, PCE, fell to 2.1%, annualized in April, below expectations as goods prices declined and services inflation cooled but remained elevated. So again, a little mix there. And then outlook, I mean, basically we've got the Federal Reserve June 18th meeting coming up, so that puts them in somewhat of a quiet period. But we do have this week, where is it at? We do have CPI this week. So CPI coming up on Wednesday, June the 11th, and you can read the rest of it. And PPI, of course, follows it. Michigan sentiment, I remember that one came out last time and FinTwit blasted it, just talking about how they're disconnected. I don't know, we'll let Price make that determination. And then you can read about why those events matter if you're a newer trader and aren't familiar. Additional notes, that's that quiet period I was talking about ahead of the June 17th, 18th FOMC meeting, so no major Fed speeches are expected this week. Market themes, let's look at the market themes. Let me zoom that in so you can see that a little better. So when we look at this chart, this is from Deep View. This is their theme tracker. This is the daily, and then the weekly, the monthly, and the year-to-date. So you can clearly see when you look over here on the right and you look at year-to-date, you can see miners, aerospace, blockchain, that's Bitcoin type plays. In China, internet, social media, and steel have been, basically everything you see in the news, these guys are leading. And down here at the bottom is airlines, construction, oilers, the areas that, as you can see on any chart, have been performing not great this year. But what we're looking for is where those, as a swing trader, where those on these weeklies where they start moving up. One of them has been solar out of the energy sector. and another is the Oilers were kind of moving a little bit this week. So we'll have to see if that oil trend sustains itself. It's still a little weak, I would say, but the Middle East tensions are popping up a little bit. And we have the Chinese and Americans meeting early this week. And if some agreements or any positive news comes out of that, then it's going to be full steam ahead, so to speak. So energy could see a little bump there. Airlines are really trying to press. They're really trying to push off the bottom. You can see here they're pushing towards the upper category in the weekly. That's an area I've got my eyes on. Airlines over here on the monthly, you can see them moving up. So these are our themes, and what we have down here is a little summary of everything. So key sector rotation, momentum observations, rotation into growth and speculative themes. So genomics and blockchain have led both the short-term and medium-term performers, suggesting renewed risk appetite and interest in innovation-driven sectors. We have a sustained strength in miners and aerospace, so that area has been hot all year, and these are probably the two easiest just to find simple pullbacks, which is primarily what I do. Look for those pullbacks, and they really had another good month. And then certain plays, you have to identify them. They're starting to separate themselves. I noticed the aerospace plays especially. Some are starting to break away from the pack and maintain strength, while others are starting to fade back. Weakness in defensive and rate-sensitive sectors, and that's what we want to see. And then mixed performance in technology. So semiconductors, again, kind of starting to separate themselves individually, like Avago, pushing into new highs this week. But other areas of semiconductors are starting to fade a little bit. So again, that's actually not a bad thing. They joined the push early, and then now the leaders are starting to pull away as we see some pullbacks. Conclusion, momentum is currently strongest in the speculative growth, genomics, blockchain, and the cyclicals, minor and aerospace themes. And I would also add in semiconductors, again, specific plays. It's becoming a bit of a stock pickers market in that area. Market carpet for the week. S&P 500 heat map for the week ending June 6 reveals broad participation in the market rally, and that's what we want to see. So you want to see green over here and red over there, and that's what we're seeing. Utilities and staples starting to fade back a little bit. Now Tesla, of course, is dragging down XLY a little bit, but the rest of it overall, looking not bad. You can see some of the movers and shakers here over the week. We mentioned Avago earlier. So the week was dominated by tech and growth stocks, which is always a good thing. There's a summary table so you can just kind of see what is causing the movement from a technical perspective mostly. And the rally was broad-based, which is always a good thing. Advanced decline ratios improving. This basically supports the ongoing bull market, but technical caution is warranted. And why? Because the S&P 500 is approaching that key resistance, and that level at 600 is going to be an interesting spot for traders to watch. There's going to be a lot of games played around it, or it may just gap above it Monday. Because remember, the Chinese and American news is a driver on the tariffs, and it is in the past. I will say, people are looking more towards economic indicators, but that's still a big one. If you're dealing with the Fed, don't fight the Fed. Market sentiment from Friday. On the market sentiment index, as we're looking at these areas right here, what I will notice, there's only one area, the put call index. That area, does appear to be some bearish hedging at the index level. That would be by institutions, which would not be unusual. It doesn't mean that we're going down necessarily. It just means they're sort of prepping, probably doing the right thing according to their system. That's what they're going to do. So overall, the sentiment indicators suggest a market that is optimistic and potentially overextended in the short term, with some institutional hedging in place. This setup can proceed either a continued upside or a short-term pullback, especially if complacency increases further, meaning a lot of calls. Market breadth, as you can see here, we're looking good, right? We're above the 50-week moving average. That's this blue line. And IWM, this will be interesting to see when we get to this trend line in terms of breadth. If we can break that upside, that would be a major bullish, obviously, sign if we can get that. Notable laggard on breadth. Had a good week last week. That's first signs. Psych charts of note. Basically, I put these little green circles here for you. Zoom that in a little bit. And you can see right here, when we do have a reclaim of this 70 level in the S&P bullish percent index, then when it does fail that second time, this may be an obvious statement to you, but when it fails that second time, we generally do trend in a downward fashion. And you can go back and look at that on your own. You can bring up the chart and you can see it. So I just noted that for you. So here we are, we reclaimed it. And so when we reclaim it without going down to that 50 level, that generally is a pretty good sign that we're going to see a short-term pullback. And so keep your eyes on that, and I will alert it in Stop Talk Insiders Discord when it occurs. We can also see here the NASDAQ bullish percent index seen below is still working its way there. When it gets to that 70 level, again, I'll alert you when and if it does. SPY, we've got some key levels here for you. Obviously 600, I won't bore you with that. You can read through the rest of it. Got the other levels. If we break down, those are important to know. But I will say the flow right now from the chalk and money flow is still strong, so looking good overall. SPY chart with the deep view market trend analysis, we are still green, green, green. The SPY is still above uptrending 10, 20, and 50 moving averages, and we are still in a Sam Weinstein phase 2, stage 2 analysis, so that is great to see. Weekly relative rotation graph. On the weekly relative rotation graph, you can see some obvious movement of the growth stocks here. Always great to see them in the improving quadrant, and an increase in velocity by XLK on the relative rotation graph. That's key. We did not get it in XLY, although we did push forward into the improving quadrant. That obviously, if you didn't know, is from Tesla weighing it down. It's a weighted stock, and I think second largest weighting behind Amazon. Could be wrong on that. And then it's top 3. Yeah, it's top 2. And then let's see, the defensives, of course, heading down. XLU, we could still see a little bit of a dip buy opportunity in XLU. Remember some of the nuclear theme related in there, but we'll see how that plays out. And gas, of course, natural gas. If we continue to see strength in the energy sector, but right now energy is not strong, but it is rising. I mean, there's a 6% move in oil over the week. You can read through that summary there, conclusions, and then let's take a look at the offensive versus defensive chart. Now remember, again, you got to remember Tesla's in this one, but we want to see a break of this resistance right here. You can see it was prior resistance. We did push through it and then fade back. If we don't, then we could see ourselves retesting this 255 level. And then the equal weighted, you can see right here in discretionary, we are trying to break this trend line. That would be really good, really positive to see the equal weight outperform XLY. That would mean, again, good increase in breadth within the market. Positive sign for bullish continuation. Key ratios from Friday. I'll read you the conclusion on that. So sector rotation signals a bullish risk-seeking market environment with cyclicals and growth sectors leading defensives across most key ratios. And so that's very much what you want to see. I mean, it looks great when you see the green. And that's what we want to see. We want to see the green across the line, and that's what we are seeing there pretty much, with the exception of discretionary versus staples. And again, Tesla probably having a good bit of play in that. All right, value versus SPY. So this is against the benchmark of SPY, and XLI clearly leading the group right here. The rest of them actually are in downtrends. So you can see the chart right here. So industrials breaking out, short-term downtrend for financials, no reversal for materials, and energy near its lows. And then defensives versus SPY. On the defensives, again, downtrend. We've moved from consolidating to almost downtrend. We'll see. We haven't broken these lows yet. If we do break these lows, in fact, I need to go in and draw some trend lines right there off these lows. And if we break these lows, then really just on that one, if we break those lows, then we could consider ourselves in a downtrend. So they're going to be testing it, looks like Monday. We'll see what happens there. So it's hard to be bearish. In other words, you say, SPY is going to get rejected at that 600 level. Well, if I flip it on you and look at it this way, then SPY is going to bust through 600. So we'll see which way it goes. That's part of the fun. Price will determine that. And then thoughts this week. The wall of worry is in full effect. My port's climbing that wall of worry, so it's pretty simple. As long as I hold this trend line, then I'm going to be bullish as bullish can be. If I see I start, as you can see, I'm testing it. If we break below it, or I put in a new low right here, then I would definitely pause and reflect on the market. But for right now, believe you can do it. Keep studying. This is Fat Infantry bringing you the Fat Plan for the weekend. Good luck next week if I can help you in any way. let me know.